Well, looking at mining company results and the outlook for that sector with Tony Cadle, who is Head of Resources at Ashburton Investments. Morning, Tony. I'm going to ask you the question I asked Jean-Pierre a little bit earlier. We've got a big week for Anglo American in terms of results because they report on Friday. Amplats was yesterday, Kumba today, and of course they have big shareholdings there. Two very big, important contributors to Anglo and very different companies.
Yes, the results from Anglo Platinum illustrate the kind of pressure that the deep level platinum mines are having. If you look at the cash flow statement for Anglo Platinum, they only made, after interest and tax, they only made 339 million. They then went and spent 2.3 billion in capex. So that really is a loss of 2 billion after capex, and we normally look at these earnings after capital expenditure. So, you know, in a situation like that, it's effectively a loss of 7 rand a share, which is not that exciting, and obviously that's negative for Anglo American because of the 80% holding. In contrast, the Kumba results today, that's really, if I can use the pun, the diamond in the Anglo American stable. I mean, there they made operating profit of 14 billion. They also have capex of about 2.3 billion, so they got 12 billion after that. They've announced a dividend of 6.5 billion. So, you know, it's on a dividend yield of around about 8%. It's really that the two companies are vastly different at this point in time. So Anglo Platinum have got some serious issues. They either have to bring down their costs by 4 billion a year in order just to break even after capex, or they're hoping that the platinum price goes up. So I think if you look at Anglo Platinum, their long-term plan is to reduce production from the mines in the Rustenburg area and really focus on the eastern limb of the Bushveld complex, where you have infrastructure which is not as deep, costs are lower, and that would make the company a lot more profitable. And I think that's something that's in process at the moment.
Now, Mark Kutufani, the new chief executive of Anglo American, has talked about a review, and I suppose all new chief executives have to do a review, but of course there's more pressure than normal. What might he review? I mean, the company's earnings and profits and revenue indeed come from these 2 or 3 really big shareholders.
I think obviously he would look once again at Anglo Platinum, but I think they've undergone quite an extensive review. If you look at it longer term, Anglo Platinum is the largest platinum miner globally. They have the best resources globally. They have to fix it up operationally. I know people are suggesting they would sell it off. I think from a longer term perspective, I very much doubt whether you'd sell off Anglo Platinum. They've just made the purchase of De Beers, so I can't really see them doing an about turn on that. I think that company needs a lot of capital expenditure, and I think that's one of the reasons the Oppenheimers sold it. There's a lot of capex, a big capex program going forward. I think they want to see that through. Again, they would be a dominant player in the diamond industry, and they want to dominate in certain areas, certain resource sectors globally.
So what else might be on the table, if anything?
I think there will be a review of costs. I think that's going to be big on the agenda, and probably a streamlining of certain divisions. I think certain divisions may well be streamlined. If they can't get their costs under control, they'll probably be closed down or certain sections sold off.
Now, it's a bit of a surprise to see where the diamonds, just to go back to De Beers and Anglo American, end up. At one point, the Oppenheimers were saying, now we're going to be diamonds and we're going to do De Beers in almost a return to the roots. It's the opposite now, and it's almost like Anglo American wouldn't have expected this to be the outcome.
I think if you look at the Anglo's portfolio, there's certain, I think, longer term strategic assets. One are diamonds and the other is platinum. We think that if we look at the Chinese economy, they've gone through the infrastructure bull cycle. They're now going to move and switch to a consumer-based economy. So the demand for cars and for platinum and autocats will be there, and with time the demand per capita for diamonds will increase quite dramatically. It's not something that you're going to see over the next year or two. It's something that's probably going to evolve over decades. I think that mix of diamonds, platinum, longer term is a good mix.
And of course the iron ore, which as you said is the diamond also in
at the moment. But
Yeah.
I think going forward, my sense is that the heroes today are not necessarily going to be the heroes tomorrow, because as China reduces its infrastructure spend, the iron ore demand will slowly, the growth will decline, and we've got, unfortunately, the big iron ore miners globally are ratcheting up production over the next 2 years with the capex they spent 5 years ago.
Finally, your reading of those wage talks. We've heard about the 60 to 100% demands. We've heard the chief executives of various companies saying we can't do double-digit increases. They don't want to give any increases in the case of the gold sector, that was said. So what actually will be the outcome here when this process is finished?
I think this is a massive problem facing the mining industry in general, because there's such a divide between management and the workers. And this is not something that's going to be resolved in, we thought that after the Marikana incident, etc., that we would have a situation where miners normally go back after a strike after around 6 weeks and there's a settlement. This has been going on for a year and hasn't been settled. And the unfortunate thing for the South African mining industry is the fact that we've got inter-union rivalry that is rearing its head, and I think that's a multi-year issue that's going to have to be developed. That will continue, and what the mining companies are having to do now is to have another layer of management purely to focus on labour issues. So their costs once again ratchet up. I would hope that all parties realise the dire states. And I think that people need to understand that after capital expenditure, the gold miners are not making money.
Yep.
And neither are most of the platinum miners. They are simply not making money. So there has to be some kind of a truce and some kind of pact where everyone works together for the betterment of the industry.
Well,